Fucker. Fucker. Same. We got something special. Mm-hmm. Mm-hmm. Like Hershey's in the middle. Mm-hmm. So sweet. Will you meet me at the back? We just stay in the market or at the track. Oh, we track. Oh, 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 when you're too much, when you're Lady, oh,
It's officially starting the final day of Summit 2025. It's been a lot. It's been a lot. And like I said, we got to keep it going. We got to keep it going. So shout outs to each and every single one of you that have showed up, showed out. Let's see those notebooks. Where they at? Where they at? All right. How many of you guys are still on book one? How many of you guys are now on book two? Book three? Oh, okay. Wow. Okay. Well, it's only going to go up from here. So today we start off with some wealth management. I feel like we went through a lot, but I think that we got to bring it in. And I think that this is going to be cool for you guys because remember that survey that you guys took on day one? So we get to answer a lot of those questions that help each and every single one of you solve some of those challenges. Is that fair? All right. And then also shout outs to the cousins that are watching virtually live. Hi. I mean, hey, show them some love, people. Also, by the way, I'm not the only one up here on stage. So for the folks back at home, give it up for none other than the wonderful
Mark,
yo.
why does it feel like a Sunday?
Because we've been doing a lot. It's giving revival.
It is. Is that what's about to happen?
I mean,
Where's the Come Up Cousins choir? Are we queuing them up?
I mean, shout out to the when it's time for tithes and offering, we'll make sure we have a great song that's being sung.
Because we got to support the building fund. You know? We got to.
It's like a 25-year building fund.
Hey, that's how they do it though.
How are you feeling today?
I feel good. I got some rest. So that's always good. And I'm excited about today. It's our last day.
What does rest feel like?
What does it feel like?
Yeah.
Oh, you don't know, huh?
I haven't rested yet.
I'm sorry, I can't relate. First Lady of Leisure, I'm sorry. Well, anyway, I'm really excited though. So we have, remember on the first day, we talked about the importance of having a roadmap and knowing what you're getting into.
Yep.
And this morning, our first speaker will be talking about that. So that's great.
Do you want to bring him up?
Sure.
All right, let's do it.
All right. So give it up. Bush of Dual Advisors. This is also a sponsor of the series as well as on the culture and this event, as you can see on the thing. So, where's Christopher?
He's right there. He's taking his. He should have his music.
Yeah, step back, Christopher. Hold up, real quick.
Oh wow! Wait, intro music. Oh. We're doing. I gotta be like you, Chris. I want to be like you're my spirit animal. Look, man. Look, that blazer is fly. So I just want to know what's the song that he's gonna come out to now. So you know what song? Do you guys have any idea what song I would come out to? No, that's Chris. That's Chris. He was the one that actually night. And then when he comes out with the song, couldn't catch Chris in sight. Here we go.
I got niggas in this motherfucker, man. That nigga what I do for me. I be feeling
Hello. All right. See, if y'all played some music last night, I would have turned up for y'all. I try to control myself. I was at dinner last night. We asked, like, what part of you were like professional all the time versus like, us, right? Natural us. And I struggle with that. I have to be like professional like 90% of the time on my day. So when the camera's off, the Zoom meeting's over with, I get in my car, right? We playing Brucey, right? So yeah, there's a whole different side of me y'all probably don't know, right? So maybe one day y'all can enjoy it, right? So good. So let me start here. So if you don't know me, I'm Christopher Bush. I'm from Biloxi, Mississippi. Well, let me be real, because my best friend is in here since like kindergarten. Jonathan, stand up for me real quick. So this is my Jonathan. We've been friends literally since elementary, probably more than that, right? So he's known me a long time. So he actually lives here in Seattle. So I'm from Goshen, Mississippi. Let me give you the real city, right? Biloxi, that's a bigger one, right? But from Goshen. Graduated from Tuskegee University in you. They didn't do it right. Graduated from Tuskegee University in mechanical engineering. So for me, I never wanted to focus on wealth. I never wanted to be an advisor. I hated sales. I hate speaking in public, right? When I was growing up, like in church, I always went to church. Mom and dad made me go. And we used to have our Easter programs, Christmas programs, right? Like, just give me Jesus whip, right? Give me the 23rd Psalms and like that, right? I promise you I was going to forget my lines, right? I was going to get the scripture. So everything changed for me. Just a little bit of background before I get started. So things changed for me when I was 19, right? I realized that me just going to college, receiving a bachelor's degree, going to work for a Fortune 100 company, right? At ExxonMobil at the time, 22 years old, making six figures. That was great in theory, right? But see, I saw my dad do that his whole life, right? My mom, she was an educator. She was a superintendent of Jackson County School District. My dad, he worked at Chevron Refinery. And so our entire life, my parents had built demanding jobs, right? And I appreciate that. They work hard for us. They've been there for us. They put me in a position to where I am today, right? But at the same time, one thing we like is time, right? We didn't have a lot of family vacations. We didn't have a lot of time to do things together. It was us spent working together, right? Most of my time spent was with my dad, was us working, right? So since I was little, I've always been around real estate. That's what he did part-time, right? So I hung sheetrock and fixed toilets and, took off the front door when they didn't pay rent and said it was maintenance, right? I don't know if that's really illegal, but that's what my dad taught me, right? I used to come home and there used to be cars in the back. I said, Daddy, we get these cars from? Well, they didn't pay rent, son. So I took the car. I'm like, you can't do that, right? So at 19, I realized that. So when I was at Tuskegee University, I started, it was the infomercial with Dean Graziosi, right? Who knows Dean Graziosi? Y'all seen him, right? Real estate guy. This is back in like 06. And 2 o'clock in the morning, saw an infomercial about real estate, about making money in real estate. See, my dad, my entire life since I was 5 years old, I was always involved in real estate. We have over 26 investment properties that me and my dad manage. I have a real estate company that I manage on the side as well. But I didn't understand the power of real estate until I was 19. He never broke down how to make money in real estate. He just told me to go work, cut grass, right? Toilets, sheetrock, right? Doing hardwood floors, tile. I know how to do all the handy stuff, right? So I didn't understand how profitable that could be until that infomercial, right? So that was when I got the entrepreneur bug and say, hey, look, I got to do something different. Because I realized that me just doing my job as an engineer would make me great money, but it's going to take me 30 years to get free. Makes sense? And I saw my parents do that, and I don't want to do the same thing. Like, I wanted to make something happen quicker. So 19, I bought my first real estate six-unit apartment complex. At 19, I started doing more property. And then I realized, like, you actually have to have money to invest in real estate. Right? I thought I can do no money down, creative financing, right? Use other people's money. And so that happened. And I said, okay, well, maybe if I became a financial advisor, I'll always be around people that have money. So then they would give me money. I can make money, and then I can go invest in more real estate, right? That was my mindset at 19. Okay. So it kind of happened like that. So I did engineer for 5.5 years at ExxonMobil. 2013, I was able to quit my job because I was doing financial services part-time. I saved up all my money for 5 years. And by the time I was 27, I had, I guess, like over $300,000 saved up. And at that point, I was like, okay, even if I don't do well in my business, I know I can live off 300 grand over these next 3 years. Right? The worst thing that can happen to me is I just go back and go get another six-figure job. Does that make sense? So most of my friends and peers they thought it was crazy. Like, why would you quit a 6-figure job at engineering, ExxonMobil to go do this financial advising thing? Does that make sense? Right? That was the first time I ever had a fight with my dad. The first time I ever seen my dad cry was when I made that decision because he didn't want me to do it. Make sense? So I don't know if some of you guys in here, you may have people that don't believe in you. You may have a bigger vision, but you gotta believe in yourself more than anybody else, right? So fast forward today, me and my co-founder Lester Jones, he's not here. We own Dual Wealth Advisors. I manage close to about 300 million plus of AUM for clients across like maybe 300 clients, 350 clients. And that's what I do every day, right? So today I really wanted to kind of start off by understanding where we are, right? So this is about wealth levels. This whole conference and seminars is about us thinking at a higher level. We talked about alternatives. We talked about private equity. We're talking about venture capital. We're talking about all these things that we want to invest in to be a founder, do those things. But at the same time, where are you at right now? Right? When I on the first day, if y'all remember me asking the question to the guy, I said he was talking about private equity, right? Or alternative investments. I said, at what point, how much of your portfolio should be in these asset classes, venture capital, private equity, and what did he say? Mac, between what? Between 5 to what? 20% of your portfolio. But in order to, you can get a Series 66, Series 65, becoming an accredited investor, great. But see, at the same time, just because you have a designation that tells you that you can, I can be a accredited investor, is your financial plan actually ready for that just yet? Does that make sense? Because based on, and I don't know if y'all did the survey wrong, but I'm gonna just tell you what I got. Okay? Because I'm gonna be truthful with y'all today, right? I want to bring it all together. Okay. So when I did the survey, my first question was, what is the current investable assets or net worth do you have out, excluding your primary residence? That just means, in simple terms, I should have kept it simple. How much money you got? Right? Because people are all right, my man said, man, Chris, I probably overthink that, right? How much do you have? Right? Retirement accounts, investment accounts, real estate property, that's investments, that's your primary. How much total money do you have in your to your name right now? Right? So based on the survey, right, it's about, about 60% based on the survey, if y'all did it right. 60% in the room has less than $250,000 saved as net worth. 17% has between 250 to 500. 13% 500 to $1 million. 9% $1 million to $3 million. Two people have between $3 to $5 million. Right? So I'm gonna ask you a question real quick. So if you, and this is not to put anybody out, like this is just like this, we want to be real tonight. That good today? I want to give recognition first, right? So if y'all feel comfortable, if y'all don't feel comfortable, take Chris, I don't feel comfortable like that, but we family, right? So if you have over $1 million, can you stand up? Right? That's a big deal, right? Stand up, keep standing. Everybody look around. Women, men, y'all look around. These are the people y'all need to get a date with. I take that back. If you're married, sit down. Then the people that still standing, y'all need to get a date with, right? So we have to understand. So if the survey is true, it was about 130 people that answered the survey. So if that is true, that means that we got to understand where we are right now. Right? So, and most people say, Chris, I don't, another thing, right? On the survey, so 83% of the people in the room don't have a financial advisor. And what does that mean? Because most of you guys think you don't need a financial advisor because honestly, most of the financial advisors in the industry probably don't know as much as you guys know when it comes to trading or building assets, building portfolios, correct? That's how y'all feel, right? Y'all don't even like me, real talk, right? It's like, Chris a little wealth advice, right? But I understand that I'm different because I am a trader, right? So I can have better conversations to you than Edward Jones or Morgan Stanley or Ernst & Young or any of those type of other advisors because they're not traditional. They're traditional advisors. They can't handle people like you guys from maybe a portfolio standpoint. Does that make sense? Well, from a growth portfolio standpoint, right? But there's multiple assets. There's multiple things we got to talk about today, right? What's the number one asset? What's the best performing asset class right now in 2025 year to date? What's the best performing asset class? Outside crypto. Okay. What's next? Or maybe it's kind of close. All right. Probably our internationals. Did y'all realize that? Right? How many of you guys are really invested in internationals? Emerging markets. Like less than like 10%, right? You see what I'm saying? But however, that's year to date, I'm gonna show you a portfolio. Year to date, it's up 37% year to date on internationals, right? So we got to understand about asset allocation. We'll talk about that. So next thing is we got to understand is, dang it, y'all follow me? I'm gonna get into my stuff, I promise. I promise. It's gonna be good. Hold on, that's what I want to say about it. Okay. This is another thing that was important on the survey. What's the biggest challenge you face in building wealth today? 50% of you guys says finding the right vehicle, opportunity, or skill to generate more income to invest. That makes sense? However, 80% of you guys in the room on the survey said you guys are traders. Only 5% of you people, only 5% of people in the room said I was a full-time trader. So that means we have a gap. You guys want to be traders, you want to be profitable traders, but you're still looking for an avenue or a way or a strategy to say, hey, how can I generate more income from my activities on a daily basis? Does that make sense? So that part is important for us to understand. We have to know how can we get our skills up, right? So think about this. This is the first thing I want to cover. How did I do smart? It's not working. Maybe I got to turn it on. All right. Disclaimer. I know I'm not going to get to through none of this information. So y'all can go ahead and sign up here. All right. Skills.com. It's free. Y'all don't like paying for nothing, so it's free. I'm joking. I'm not joking. Right? So what I'm going to do, I'm going to break down the presentation. This is going to be a real good overview, but my role is I want to make sure I take the information that I want to give you guys that's in my head today, and I want to make sure y'all get all the details. Okay, so I'll be posting videos. I'll be doing a full course on every single wealth level that I'll go over. Okay, so make sure y'all guys sign up here, and it's free for now. And it's gonna be like karma. Y'all gonna pay later, right? Or after pay. What's it called? All right. So boom. My first thing. Before we get started, we got to understand, like, what's your number? Right? So I want you guys to get a pen and paper handy. Go through this exercise with me. And let's work. So if our main goal is from the survey, y'all said y'all want to be free. So if we want to be free, we got to understand, how do we get to freedom, right? What does that freedom number look like? If we're traders, we still got to know, right? So what is the amount of investable net worth you currently have right now? What's that amount? Put that down. I just did an example. Let's say if you have $500,000 saved up, right? Number two, it says, right, at what age do you want to stop working or stop having to work, right? I know for me, I don't think I'll ever retire, but I just want to transfer to doing something I really, really want to do, right? My golden dream is I want to be a basketball coach, right? I don't want to run a business forever. I don't want to be a wealth manager forever. I really want to be a basketball coach, right? My man back there, I'm like, what's up? Yeah, he been picking on me all week, talking about he gonna dunk on me and all this type of stuff. So we're gonna get on the court later. Yeah, he said he get a rebound over me. Yeah. Number three, right? What's the lifestyle cost in retirement? Like, how much? Okay, if you're saying, hey, look, I'm financially independent, financially free, or I'm at this first level, right? Because everybody wants to have 10 million, 100 million. We all want that, right? Let's see, what's that real number to say, hey, look, if I had $250,000 coming in per year on a residual basis, this can fund my lifestyle. How much? What does that look like for y'all? Is that 250? Is that 350? About 100 grand? What does that really look like? Okay. Y'all got it? Number four, I want you to, I didn't spell that right. Forgive me, guys. I'm a math, I can't spell, right? Divide that by 0.5. 0.05. 5%. All right. So for me, if I'm saying, if I want to have $250,000 that I want to have, being financially free or residual income, however you want to call it, I need to have at least $5 million saved up. Does that make sense? But that $5 million is only in my income bucket. We can't count money that's supposed to be in emergency funds. We can't count money that's supposed to be in lifestyle fund. We can't count money that's supposed to be in your future healthcare bucket. We can't count money. See something? We can't count money for the kids. This is a money that you have to have in one bucket. See, a lot of times what we think about, oh, I have a lot of money. If you got $5 million, only, but you was trying to get an income of 250. That 5 million has to satisfy that one thing. So you need more than 5 million. You just need 5 million to fund your lifestyle. You got healthcare expenses. You got a lifestyle. You want to travel, right? You have kids, emergency fund. Does that make sense? So this is just that one bucket. So what bucket are you building that's going to get you this right here? Does that make sense? I said, what's your personal average rate of return? I said 10%. And again, most of you guys are traders. That Chris, I can get a 20%. I can get a 40%. I can get 1,000%. Okay. This is where my financial advisory part comes in. I understand that you may can get a higher rate of return, but on average for the last 30 years, what has the S&P or average market's return? What's the average? 10% over the last 30, 40, 50 years, right? Now, I don't know about you guys, but most of you guys probably don't want to trade forever. You don't want to be stuck to a computer forever. Yes, you could. That's why Mark said, he said, look, I'm right. He said, he done. He can do it at some point. The main goal is for you to do the things that you want to do. And yes, trading may be a part of it, but you don't want to have to be structured or stand still to a computer. Does that make sense? Right? So I'm going to benchmark my financial plan based on real numbers and history. I'm not going to base on financial plan on, hey, last year I got a 40, like return portfolios, I got a 45% rate of return. I'm not going to say I'm going to get a 45% rate of return on average every year. It's not going to happen. It's to happen. Because in reality, think about this, guys. Y'all notice, people that have real money, $5 million, $10 million, $20 million plus, do they even focus on alpha? Okay, you said, Chris, what's alpha, right? That's it, right? I'll talk in normal terms. Do they focus on getting a 15, 20% rate of return from their portfolio? Why not? Tell me, why not? Charles? Why? Please tell everybody.
Because they already have reached to where they need to be.
Yeah, so
They don't care.
Yeah, so if I'm sitting down with a client, like one of my clients, they have over $20 million with me, right? So we don't focus on trying to put all of our portfolio in NVIDIA, trying to get a 40% rate of return, a 100% rate of return. Chris, I got 10 mil. If I get a 6% rate of return, I'm what? See, what we have to realize is that when we don't have a lot of money and we're trying to get there, we also chase returns at a higher amount because we're trying to hurry what? We end up blowing it, right? How many of y'all have blue accounts? Think about this. How many of y'all have blue at least on this trading journey? Blue at least 50 grand. Stand up for me. Let's do it. Journey, if you blew at least 100 grand, stand up for me. Keep on standing. Journey, if you blew at least 250, keep on standing. On your trading day, still standing. Y'all, if you blew at least, shoes, damn, 50 grand, still keep standing. Y'all need financial advisors. That's what y'all need. I'm telling y'all. 2. Right? I think I can't count how much I blew, but it's at least 250 plus. We gonna say it's learning, right? I ain't even got to none of my stuff, and we just having fun, right? Anyway, I'm gonna hurry up because I don't have all day, right? So then, personal rate of return. How much money do you have invested monthly? How much money can you invest monthly? Is that $1,000, $2,000, $3,000 a month, right? The profits or income. What can we do, right? And then I want you to go bring up calculator.net for me. If y'all on your phones, go to calculator.net real quick. Hurry. That's a good slide too. We'll go back to that. Calculator.net. Then go to investment calculator. Y'all okay? We good? Yeah. Y'all got me sweating like a Baptist preacher up here. But we're going to pass the plate like Jolene said. Okay. All right, so what you're going to do, you're going to put your starting amount in. So in this case, 500 grand. Right, we're going to put rate of return. So we'll say 15 years because they want to retire in 15 years. Rate of return, say 10% rate of return first. Right, and then I'm going to say $1,000 a month. So based on my current track, this is where I am. right? That means I can have how much money saved up. So at 50, I'm 39 now. So at 50 years old, right? Boom. At 50, calculate that. That's 2.6 million. Just calculated that I really needed to have how much? 5 million. So what's my gap? Right? That's my gap. Around 2.5 million. So then I got to ask myself, how much more do I need to make in order to fit on a normal, on market returns, not on trading returns? Because y'all just said y'all blew $500,000 now. I don't know if I trust y'all just yet. So we gonna go on market first. Then we can upgrade to what y'all really do, okay? Change that to 15%. Right? Return. I'm almost there. Right? That's 5.3. So go back to my slide. So we can get there on a 15% return, right? And if you follow what I say, you follow what Mark say, we can get a 15% rate of return, I think. Dang, this is probably recorded, so I probably shouldn't say that. I can't promise gains, right? Disclaimer, past performance doesn't predict future performance, right? Y'all got my disclaimer. I'm not promising that was bad. That's why I can't be on YouTube. And so y'all say, well, Chris, why you ain't social media? Why ain't you on YouTube? Because basically I have a license, so I can't say y'all can buy XYZ stock. I can't say y'all can buy XYZ ETF. That's why I can't do YouTube, right? They shut me down. SEC, hey, Chris, why are you doing that? I have to be careful. I can't talk a lot. Yeah, but Mark can. He ain't got no license, right? So what does it say, right? So we're paid, so 2.5 million that I need, a 10%, that means I need to save an additional $6,500 a month. Traders. So 83% of you guys are traders. So you got to say, okay, so I need to find a trading strategy that I can consistently do that can make an additional $6,500 a month if I want to reach my income bucket retirement goal. That ain't really a whole number. That's just the income bucket. Does that make sense? How important this is? Because we ain't really got no money yet. Does that make sense? Right? I want to break it down. We're going to have it, but we don't have it right now, right? So if I'm doing a 15% rate of return, it's got to save an extra $550. Does that make sense, guys? So always remember, just keep it simple. Every $1 million equals $5,000 a month. Every $1 million that you have equals $5,000 a month of income that can be for a lifetime based on the market or you getting a 5% rate of return. You say, Chris, why so low? Because I'm being conservative. Mark talked about an upcoming what? Recession or crisis, right? So my goal is we want to build our portfolio to where it doesn't matter what the market does. I don't care what the market does. I'm not preparing for a crisis. My portfolio, my foundation, my financial plan, it's already been prepared. When I use my client's portfolio, when the market goes down, my clients don't call me. Most of them don't. Some do. Man, the ones that never mind, let me okay. Most of them call me because they understand when I build a portfolio, I've already accounted for a 20% drop. Already accounted for a 30% drop. So they don't need to call me and say, Chris, what are we doing? Just because you don't see nothing done on your account, that doesn't mean something's not going on in the background. Does that make sense, guys? Yeah. Right, so what does this mean? We gotta understand what's your wealth engine gonna be. If you're a founder, you better hurry up and we gotta found a company. You gotta get an exit. If you we gotta hurry up. Yes. Biggest things that most wealth advisors don't tell you. I'm a wealth manager, not a magician. So if you come to me and say, Chris, I have $100,000, $200,000, I want to retire. We just can't retire yet. Does that make sense? Yeah. Man, this is why my dad was so pivotal in my life because he worked 12-hour shift, night shift, but he still did real estate. I didn't understand why he did real estate until I went to college. I didn't tell you the mother story, right? I was recruited for Tuskegee for academic and athletic scholarship. I got the athletic scholarship. On signing day, the coach that recruited me got fired. Tuskegee private schools, they ain't got no real money, right? After they say you got some other scholarship, you can't get no money more back, right? Right? So, however, my dad sold his real estate property, so I don't have to worry about student loans. Right? So that was, you have to do something different. You got a skill. I think Mark talked about that yesterday. What Gen Z or something, what you got to do? You got to learn a skill. Either going to learn how to sell, you're going to learn how to build, so you got to learn those things to help you drive income outside your W-2 job, because I think 67% of you guys in here have a job, which is good, but you got to do something different if we want to build wealth. We can't keep on talking about generational wealth as this tagline when honestly, I hate that word, right? Not in the best, because it's a destination that most people don't truly know how to get to. Right? If we're on an airplane, we got to put our mask on first, right? So we got to do this first. We got to go over the wealth levels, okay? I'm not going to be able to go through all 4 of them today because I don't have a lot of time. But when you guys go in the school community, I promise you, ask every question that you can. I'll have videos. I'll have weekly coaching sessions. You can book one-on-one calls. I can build your personal roadmap, not for free. Yeah, not for free. I just can't do it for free. I just can't. Right? We're going to pay. Right? It's okay. Y'all done paid the market $500. Y'all can pay me. You know what I'm saying? Just act like it was a put. Say this is for Chris. And you don't get the numbers to fix it though. Does that make sense? Can we just think about man, oh man. You know, I probably spend at least over $150,000 a year on coaching, on coaches, on trainer. I'm a financial advisor, and I promise I don't know everything. I just spent 2 weeks ago, I spent 4 days with an advisor coach to help me with my financial plan, to help me with my business plan. Does that make sense? Didn't Michael Jordan have a coach? Oh, come on, guys. Boom. So these are levels, right? Level 1, foundation, 0 to 500. Level 2, 500 to 1 million. Level 3, million to 5 million, less. 4, level 4, 5 to 10. Make sense? Those are the levels. We're going to work through them. Not all of them today. They didn't give me enough time. Right? Yeah. Okay. Level 1. We got to start with the foundation. Financial accounts. This is what your accounts should look like. Minimum. Number 1, emergency fund account. But y'all, I know traders don't like to have cash sitting on the side too long, huh? If y'all got cash in an account, Chris, what are you doing? Like one of my clients, and she probably in here. I'm sorry. I'm not picking on you. We just talking, right? She said, Chris, so you have $12,000 in my account. What are you going to do with that cash? Like it's just sitting, not making money. It's supposed to be for emergency. So it's supposed to be for emergency. Does that make sense? Yeah. It's okay. So think about it. You guys evaluate how successful a company is by how much what? Cash they got to sell line. The reason why you like Apple and Nvidia is because what? They got how much what? So if you judge a major corporation and how successful they are, if you would invest by how much cash they have on the sideline, why are you scared to have cash on the sideline? Why do you feel like you have to trade everything in your portfolio, that everything has to grow a 20% rate of return? I'm being real with y'all, huh? Yeah, that's how y'all think. I'm telling y'all. I know. I done had like 600 appointments with come up cousins. Right? Y'all say, Chris, man, where did Chris go? Man, just pay me in 2021, 22, right? This how the Zoom calls work, Mark. They call me, right? They saw you on YouTube. They saw you and I on YouTube. Yeah. Right? Mark said, hey, we doing options, we doing a strategy. Boom, book a call with Chris if y'all got questions, right? I did all for free. Right? I got divorced over there. Right? Don't say all. It's fine. It's cool. I'm recovered and I'm right, it's cool. It's cool. It's cool. Y'all needed coffee. Y'all just needed me. Right? What was I saying? I got ADD. What was I saying? You're calling me afterwards. Hey, transfer my mama 1K of 200 grand so I can put in options on ARKK. I'm like, dang, like so then I go through my story. Hey, look, I know Mark, he's an amazing guy. He's gonna teach you how to invest, but hey, based on your financial plan on your portfolio, hey, we probably should just allocate a little bit. Like we shouldn't do it all. We should maybe have a portion, a sleeve of your account with options, right? Because I don't want you to lose everything. Chris, but Mark said, but the market's y'all done lost all your mama money, right? So step 1, we gotta have an emergency fund account, right? For me, this is for me. I don't use high yield savings accounts. Y'all say what? Because everybody said, man, I need to get me a high yield savings. The high yield savings ain't high yield. It's a false word. It ain't high. 2 or 3% ain't high. Is it high? No, so why we call it a high yield and it don't even grow? So I don't play around with the inky beady return. Like, it's okay, 3%. Chris said I have it a high yield savings. Hell, it don't matter. It work the same. You put it in your bank, you gonna get 3 cents. If you put it in a high yield, you don't get 3 cents. Like, we ain't tripping on that. Does that make sense? Yeah. But what I will tell you, pull up my portfolio, Mark, on Duo dividend protection. Don't ask me for no fund symbols. Don't ask me for no tickers, no allocations. This is for my clients. So y'all can pay and y'all can get the, okay? All right, so this is the dividend portfolio. So for me, so if a client has less than $20,000 in cash, I'm not investing it. I'm putting it into a money market account that should yield about 3 to 5%. Does that make sense? I'm just straight cash. I'm not worried about it. It's just straight cash. All right? I want you to have a fully funded emergency fund account. Again, Mark talked about having a crisis. You guys, the first thing you guys think about is, how should I adjust my portfolio? When the portfolio honestly is secondary, your protection should come from your financial plan. So for me, I don't care if the market drops 20% because I have cash, 6 months, a year of cash on the sideline to live if something happens. Your financial plan does that. That's why Apple has what? That's why NVIDIA has what? So why don't you have what? Man, shoots. Y'all didn't think I was gonna preach today, huh? Dang it, I'm out of breath. Okay, scroll down to performance. Scroll down a little bit. Y'all probably can't see this because the lights too stuff. Can you all, I don't know. Anyway, this portfolio, I promise you, says Mark. I don't want Mark's portfolio. Right down, dividend protection. The first tab, first tab up top. You got it right there. First tab. Oh, it's already up there, bro. Wait, it's updating? Yeah. Okay. I'm doing okay? Yeah. You having fun? Yeah. Okay. Y'all getting something out of it? Yeah. Okay. How much time I got? I ain't got no much time left, huh? We ain't do nothing. We gonna get through this. I wanted to do some good stuff, but we gonna run through it. Okay, I promise I'm gonna be done. We can ask some questions. Anyway, let me just run through it. Basically, a dividend protection account I was gonna show you guys. So what I built for my clients, once you have a fully funded emergency fund, 20 grand, 30 grand, 6 months, whatever we decide, right? But minimum, I won't do this strategy until you have at least 20 grand in cash. So I'm going to run a dividend protection portfolio. It's a stock SMA that stands for Separately Managed Account that I run, that our company runs, that I actually run. So the goal is I want to outpace the savings rate. I want to outpace the bank. I want to outpace high yield savings, right? Well, year to date, the account's up 29%. Year to date, save money. When the market crashed, when the market went down 22%, negative 18%, and 22, the portfolio still did a positive 3.6%. Scroll down. Click on performance. Y'all can look at it up here, right? Scroll up. Click on performance first at the top. Click on performance. Mark, click it. You ain't got no time left. Scroll down. So year to date on this dividend protection portfolio, save money. Return year to date is 29 what? The market is up 14. Cash money is still up 29%. I'm getting more returns. But that's not impressive. What's impressive is last year this portfolio did 47% on dividend protection, on safe money. That's impressive. In 2022, the market did negative what? No. 0.36. It didn't lose what? So again, I don't have to get prepared for no recession. My portfolio is already what? Don't say that word. That's y'all recession, right? Crisis proof. Does that make sense? So my job is when I build a foundation, we don't have a portfolio for every situation, so you can sleep easy, right? That makes sense. And that's kind of crazy. I get excited when I need that. Go back to my presentation. I only got a little bit of time. Go back. Oh boy. So emergency fund account, gotta have that. Next account should be a short-term account. So that's going to be an individual brokerage account, but it's built with using long-term stocks, but it's built for non-retirement, right? Because if you want to retire prior to the age of 59 and a half, most of your retirement assets like your 401k, TSP, 403b, you have to be a certain age to touch it, right? So what we want to do is we want to have an individual brokerage account that's still focused on long-term, that's still focused on growth, that's still focused on all those other things, right? But we still want to have access to it. We still want to be able to say, hey, if we wanted to take a securities-backed line of credit off that account to invest in private equity, to invest in private real estate, to invest in short-term rentals, we can actually take a securities-backed line of credit off that account and use the money. Does that make sense? How many guys use securities-backed lines of credit? Not very many. Y'all don't use the strategy, so we got to do that. That's why another reason why I want to have cash. Right? When I have cash in my dividend protection portfolio, let's say if I had 100 grand cash, I can get a securities-backed line of credit for another $80,000 to $90,000 on top of that money. So now I got cash sitting, but now I have access to another $90,000 that I can do whatever I want with. Right? Just like right now, this year, because of my income, I focus on the tax strategy. So I have to lower my taxes. So I needed to invest into a short-term rental. Right. So what I do is if I need to, my short-term rental is $350,000, I'm gonna need a down payment of like, let's say $80,000, 20% down. Right. That's probably not the right math, but y'all feel me. All right. 20% down. But I'm going to get that down payment from the securities-backed line of credit. Then I'm going to change the portfolio and I'm going to make it a high yield dividend income portfolio. So then the dividend income distributions will outpace the interest rate that the securities-backed line of credit gives me. Then since I'm getting a short-term rental, I don't want to worry about nightlies that are not booked. So then I'm going to have generated enough income from that portfolio off that account that has a securities-backed line of credit to generate enough income to make sure I pay the mortgage every single note, the expenses every single note. So now it's self-sustaining an asset. So now I got an income from the portfolio, I got an income from my investment, from my short-term rental, and I get a tax deduction using cost segregation and depreciation. Right? Y'all don't need no advisor. Right? Number 3, so short-term account, boom, a wealth building account. So my wealth building account is that's my true long-term account. Again, this is not trading, my true long-term account, right? So that means it's going to be 70% long-term growth stocks. The other 30% is going to be broken up into private at some point, not right now. This kind of messed up. So you won't do all this at level 1, right? You'll just have your long-term growth account. But once you get to like level 3, that I'll explain, 30% of that long-term growth account will go to 10% will be private equity, 10% will be private credit, 10% will be private real estate to diversify your portfolio on the growth side. That's in level 3. But we got to start the account now. Does that make sense? Boom, you're going to have your retirement account, right? If your company does not match, we got to think if you need to contribute to the retirement account. If your company does match, contribute up to the match, right? If it has a self-directed brokerage, make sure you're using those self-directed brokerage options the right way, not the trade options out of, right? Long term. But they let me, Chris. Hey, just we're gonna chill, right? So then we're gonna also have a Roth IRA or use a backdoor Roth. We're probably gonna have some self-directed IRA so we can invest in more private equity, private real estate deals. You see what I'm saying? Those are things that we need to have in that level 1. Okay. Number 5 is you're going to have your active trading account. This is the allocation or the sleeve inside your overall portfolio that you're doing your trading, right? Don't say, hey, Chris, I got 500,000 in my accounts and 95% I'm trading options. How many? Okay. We just can't. You see what I'm saying? Like if you have $500,000 saved up totally, 80% should not be in all options. Does that make sense, guys? Like we got it. And for me, again, Mark and I are different. Mark and you are different, right? He may have all tech or some tech. He don't. He's shaking his head no, right? So we have to focus on we have to understand what asset allocation is. I can't get in that today, but I want to get into what asset allocation looks like in a real portfolio, right? Y'all don't fall asleep on me now. Okay. We'll have our so your active trading account. Now that may be one or two, because for me, every strategy that I'm doing is going to have a different account in my active trading sleeve. But also, you guys should not be trying to do 3 or 4 different strategies of active trading when you can't master one. Does that make sense? Like so again, y'all make money too complicated. Like if you hone in on one strategy, make it work. I understand there was 4 traders up here. Different what? All four. Focus on one first, build it, and keep moving. Does that make sense? Like y'all make it, y'all again, y'all lost like 500K because we're trying to try every strategy. Y'all laughing, but right? Something going on in my mind. I'm just telling y'all out loud on my appointments. I have some crazy appointments. So then we're gonna have crypto, right? If you believe in crypto, great. If you don't believe in crypto, great. I just put that in there because somebody gonna say, well, Christian, you got crypto up there, right? I do have crypto. I'm not the expert in crypto. Don't ask me about crypto. Don't ask me I know levels of crypto. Don't ask me when I should buy, when's the next cycle of crypto, how crypto mining works. Look, I just know every month I put some money in. If it drop, I put some money in. If it go up, if I got some, I put some money. That's all I know. You better talk to Chris Johnson, right? Right? That's how it is. Johnson said, I'm family and friends with Chris Johnson, right? Hey, bro, just look. And then I started realizing, like, he say some great stuff, but at the end of the day, he just said, "By what?" So I ain't even got to learn them. You got to understand what he's talking about. You got to get that right. I just said, just by what? Look levels. Again, this is how I manage my finances, guys. Every one of these accounts has a percentage to it. So when I get income from my business, let's say I make $50,000, right? That 50 grand is already divided up based on percentages already automatically going to each of the proper accounts. If I make $1,000, it's based on percentages that every single account is getting filled. So I never worry about where should I put money, because when I have these accounts land out, it may be 3% in emergency fund, 5% in short term, 10% in wealth building, 5%. You see what I'm saying? It's already lined out. So when the income comes in, the money automatically gets distributed to all of the accounts. That's my financial plan. I want everything automated. Right? So if you're a trader, you got to say, Andre, right? Where Andre at? My client, right? If you're a trader, say, this is me. Y'all don't have to do what I say, but this is how I feel based on where we at. You have $100,000 that you say, hey, look, I can trade. I have $100,000 in my trading account. That's my baseline. If you don't have 100, it may be 25. It may be 10. It don't matter. I'm just trying to use easy numbers because I don't like doing math in front of people. I use ChatGPT, right? No, but if you have 100 grand, and like if you have 100 grand, and let's say your options or what are you doing to trade, it goes to 200 or 250, you got to have in your mind, what's the level of the amount of money that I'm trying to reach before I scrape profits and I divide it back into my financial plan? Right, Andre? Right? So if my limit is from 100,000 to 200, I'm gonna swipe away 100 grand. I'm gonna start back at 100,000 and build it right back up. If my allocation is $10,000, when it goes to 30 grand, I'm gonna swipe the 20 grand, put it in my long-term portfolio. I'm gonna start back to 10 grand. Because what happens? Because y'all lost money, right? Why? Because y'all kept losing money because the more money that you had, the better that you thought that you can get. So you thought the money was going to solve the trading problem when it was really your discipline that was going to solve the trading problem. Does that make sense? If you can't do it for 10, you can't do it for 500. I gotta hurry up and recoup. It don't work like that all the time. Does that make sense, guys? Okay, boom. Crypto, then we gotta have a trust account. Make sense? Gotta have a trust, right? So, what's my dual thing? Oh, my Jesus. Y'all good? Am I doing okay? Okay. Y'all getting something? I ain't just talking. Okay, boom. Mark will help me out. So this is what I want to go through, and then I'll open up for questions. I'll be done, and we'll do the other levels later, but do the dual wealth, that PDF. So guys, I want to show you what I do as a advisor, and this is all level 1 stuff before we get super complicated, right? Because I do a lot of tax strategies. So y'all just heard one thing that I do. Because again, if you're an active trader, how many of you guys owe taxes at the end of the year because of your trading profits? Right? So what are you doing to offset the taxes that are being generated from trading? Say that again. You said, right? So we got to have a financial plan. We got to have a financial plan. You got it, Mark? The duo wealth, the duo, the one that says the value, the one I emailed you. Gotcha. And I'm gonna show you guys this, and I'm oh boy. What was I gonna say? Dang. No, it's a PDF with a bunch of little bubbles, and it talks about the value of dual wealth. Okay, cool. Right. So as level one, right? So people say, Chris, what does a wealth advisor do? What do I do? This picture is what I do for clients. It has nothing to do with managing money. It has nothing to do with asset allocation. It has nothing to do about trading. This is what I do for clients, right? Again, if you say, Chris, look, most of you guys are probably better traders than me. Okay? So you can say, Chris, I don't need you for trading. Or I can probably help you from a financial planning standpoint. Does that make sense? So this is what I go through, right? So these are the seven steps that we go through as a CFP, right? To understand what are the financial planning topics that we go through. So step number one, sit down with a client on level one, do cash flow analysis. So meaning that I'm looking at your entire picture of how you're spending money. I'm looking at your budget. I'm looking at I'm looking at your sources of income. I'm looking at your maximum cash return rate. I'm looking at your goals. We're talking about those things. I'm looking at your emergency fund. I'm looking at your stock comp plan. I'm looking at all of that in the cash flow module. Right? Step one. Step two, right? I'm doing investment planning. I'm reviewing portfolios. If you say, Chris, well, I don't need you to review my portfolios. I'm not reviewing it because I'm trying to get you a better rate of return. I'm reviewing it so I can build you a better asset allocation. I'm trying to build you a better plan to say you can be ready for a crisis no matter what the market does. Does that make sense? Where's your overlap? Where are your gaps? Does that make sense? Right? I'm looking at your stock concentration. If everything's in NVIDIA, again, NVIDIA is great, but right, we got to have some other stuff, right? There's other companies that's doing well too, right? So I'm going to go through I'm doing a whole investment planning analysis. That's what I'm doing with my clients, right? The next thing I'm going to look at risk management. Right? Because I looked on the thing. This is crazy. Let me go look real quick. Risk management, when it comes on like life insurance, like most of you guys don't have life insurance or the right type or not enough coverage. Does that make sense? So that's the easiest way to generate wealth. Besides, right? Marry and rich, right? I'm trying to figure that out, right? Look, I'm a married rich, you know what I'm saying? That may be easy. Maybe I need to do that, right? So we got to have the right type of life insurance plan. Do we get term? Do we get a whole life? Do we get IUL? How do we build our own bank? How you know what I'm saying? Y'all have all those questions, right? I can teach like for 3 hours just on life insurance. That's like one of my favorite topics. Like I'm a beast when it comes to life insurance. Y'all just, man, I'm so like, we can break anything like that down, right? Long-term care, important. Health insurance review, important. Most of you guys don't understand how your homeowners and renters insurance should be structured. You just get it from the agent and hope it's right. Right? That's how we protect from a crisis. That makes sense? Right? I'm looking at I'm looking at the next thing I may be doing, I'm doing tax planning. Not just filing taxes, I'm doing tax planning, right? So that means that probably throughout the year, you should be having conversations with a tax strategist, a CPA, or a full team of both quarterly about how you can mitigate taxes for the year. If you're a W-2, there's not very many things that you can do to lower your tax bracket if you have a high income. You can open up some type of business, you can do short-term rentals, you can do have some type of LLC, you can do charities, you can do a lot of things, but we gotta do a tax plan. Just say, hey, look, I owe this, and no, like, so it's almost October. So most of my clients that are high net worth, we're finalizing their tax plan with our tax team or with their CPA the next 2 months of the year to see how little we can give the IRS. Y'all doing that? The survey said 14% only. Everybody said, yeah, right? Right? I'm saying what the survey said, right? So are we doing tax loss harvesting? We doing all these profits, are we doing tax loss harvesting? Do y'all know what that is? Is everybody doing it? Does that make sense? So me as an advisor, that's what I focus on, right? So that's the value, right? Retirement planning, I'm looking at, hey, and that retirement bucket, what does it look like? If you're already closer to retirement, if you're over the age of 55, your goal is not focused on accumulation right now. I gotta sit down with you and say, hey, what can I do now to generate income for your later years? You can't afford the market to go down. So you need to add some guaranteed protections to your account. Y'all know y'all can add like downside protection of 20%, 30% to your portfolio. And even if so y'all think about this. For me, if I have an older client over age 50, let's say I have a portion of money, I'm going to take 25 or 30% of the money, put it into a strategy to where they can get 20% or 15% downside protection. So if the market goes down negative 15%, it'll wipe out the negative losses on that account. But also if the negative loss is at least above the buffer, let's say the loss was 12%, negative 12 instead of 15, it'll actually flip the rate of return from positive to negative. But also on the top side of the portfolio, if the market grows to 20%, you can also get 20% with no fees. You ain't got to pay me. You ain't got to pay the company. That's how the product works. Isn't that crazy? So that's just a strategy that we can add. But see, if you don't work with an advisor that knows what they're doing, like you may not, you see what I'm saying? They ain't gonna tell you that, right? Raymond James ain't gonna tell you, right? Right? Because y'all gonna go in there. What's my rate of return? 20%. What's yours? He gonna say 8 to 10. No, I can't do with you, right? Right. The last thing, guys, we gotta have an estate plan, right? Right, not just a will, because a will doesn't avoid probate. We got to have a trust. But sometimes your asset level may not dictate for you to have a trust just yet. Like if you live in the state of Alabama, sometimes the only thing that you have to cover is like a home. It costs more money to do the home inside of a trust and change the deed over than it is just to have a will and let the process do it over time. So you got to understand when to do a trust, when not to do a trust, and when to do a living will, or when to have both. But we have to have a full estate plan. So with my team, we do a full estate plan for all my clients. Does that make sense? So this is just this is just like the foundational things. We didn't even talk about no investment management. No, you see what I'm saying? Does that make sense, guys? So when somebody comes to work with me, that's what I'm taking them through. Make sense? So anyway, go back to the presentation and I'll be done and I'll answer questions for the last 10 minutes, I think. How much minutes? Oh, 3 minutes left? Okay, well, y'all get 2 questions. And get through half of the stuff. I apologize. Jonathan, I did okay? Okay. You never see me speak before, huh? You didn't even know I was an advisor, did you? He didn't even know what I did. That's my best friend. Hey, I'm real sorry. Let me pull this up, right? Pull up my presentation. No, presentation. It's not the reading. That's the PowerPoint. You know what? My first job was actually with his father. His father owns a seafood restaurant in Goshen. He hired me, and I worked at the Tiki. Had seafood. I was a waiter, a busboy. I did it all. We had good fun. All right. Okay, so basically, guys, level 2 is talks about tax strategies, entity creation, alternatives, good debt versus bad debt. Level 3, we're talking about more advanced strategies, business owners. We're talking about private markets. We're talking about institutional portfolios, ultra high net worth strategies. Step number 4, family office, philanthropy, all those type of stuff, right? So I'm going to go through all these things on the course. Make sure y'all go. So go sign up here. And it's free for now. And I'm going to have the presentation and all the good stuff plugged into the community. Y'all can ask me questions. Y'all have my direct phone number to my team, and we're going to make it happen. Boom. That's all I got. Okay. Hey, don't ask me about no trading, no levels, no nothing, okay?
I got it. The law. Thank you, Chris. Estate planning. So in short, I have a 5-year plan. Try to explain this to my family. They can't comprehend the information I'm telling them, but I want to give them a portfolio. I kind of have the distribution already in mind.
Yes, sir.
Have you dealt with that situation before? And what is the best framework to go about approaching that?
Yeah, a lot. And I think for somebody like your knowledge and what you get exposed to, especially being from here, then we try to take it back to our families and friends. A lot of them don't have the same mindset, right? So a lot of times what has to happen, your king is not a king, is even in their own home, right? So you got to have somebody else explain it. You have to have somebody mediator. Like that's where I come and help my clients, right? So if you're trying to get to them, they may not listen or receive it from you, and that's where it has to come from a third party sometimes that you trust as well. But they hear the information from somebody else. You know what I'm saying? Like it's so important for you to craft a team, especially when it comes to family, having family meetings. But that takes time. You got to think about it. My dad. I got into this industry in 2008. My dad's money was with Morgan Stanley when I got into the industry, when I got licensed. My dad didn't move his money with me until like 2020. All right. Not because I didn't know what I was doing. He would give me referrals all day. In the beginning, he said, no, I don't want you to do this. Then he realized, oh, you make some money. You good. He started giving me referrals, but not his money, referrals. So I managed his friend's $1 million portfolios. So Chris, when he take me on the boat, he take me on the fishing. Be quiet. Again, it just takes time. Like our friends, family, it just takes time. So even for me, like most of my friends, I probably have real talk. I had 8 groomsmen at my wedding. Only one of them are my client. And it's not because I'm not good. It just, again, it's just the comfort level. You know me since I had braids. Right? You know what I'm saying? I used to have braids to the back, right? I got a tattoo on my chest that say Thug Nasty, right? So they can stay. Right? I'm sorry. The stage. Does that make sense? Does that make sense? Yes, sir. I thank you guys.
Nasty. Nasty thug.
I can't.
Give another round of applause for Chris. Wasn't that amazing? Did y'all learn something? Did y'all learn something? Okay. How are you feeling about that, Jolene?
I feel good. I'm glad y'all are learning. Appreciate it.
Okay. So we're gonna give him like what, 2 minutes?
Yeah, exactly 2 minutes and 17 seconds. Don't play.
Yeah, 2 minutes for break, and then we on to the next.
Do you sky is the power and Oh, 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 sky full of love. Yeah, sky is full of love. It's love. It's all love. Oh, 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 oh,
All right. Need you guys to come back to your seats. So before we get going, um, so I know that y'all ready to get started again? All right, so we're gonna let people get back to their seats. What happened to your mic?
I think I gave it.
We have a missing mic. Can it please find its way back home? Yo, Jolene, do you see this chart?
Yeah.
Do you know what that chart is? It says Mark's Thanos
Let's see how you did.
stocks. Wow, that's a 5-year chart. So the S&P 500 has brought back 116%, and it looks like 337%.
Pop your collar a little bit.
I'm not saying I'm the dopest or anything like that, because I'm probably sure somebody out there is even beating me. I'm probably sure Chris would like literally do circles portfolio. And I think that's also would help. Do we have a mic back there or something that's missing? Do you have the mic? Oh, wait, how did you get the mic? Okay, shoot, thank you. Got to make sure that we keep all equipment and return it back to its rightful owners later on today. She's got Mike. Give a round of applause for the gentleman that returned the mic to. We appreciate you, bud.
Little frog in the throat.
Hey, this honey citrus minty is really helping my voice right now. So I might have to go for round two. All ready for the next one? Okay, so one of the things that I noticed is that a lot of folks were talking about building ideas, Jolene, but a lot of times where founders definitely struggle is not really just building the idea.
Where is the struggle?
It's really going to market.
Oh.
So like you build an idea and then all of a sudden it's like, oh shit, now I have to put it in front of everybody else. And how is it I get customers? How is it I go from 0 to let's say 100 million?
So it's the scale part, bringing it to market and then scale.
Yeah.
Okay.
So
I can help out with that.
you know, that would be pretty dope if we actually had a person that knew how to bring a company from 0 to 100 million.
That would be awesome. I think I know somebody.
I mean, I think we know somebody. I mean, like, for example, if we're able to bring like, sit up on the stage with like, $1 billion worth of, assets under management, yesterday, I think we can do this.
I think so.
You sure?
Yeah. You know what I also heard?
What's that?
Think about the person who's coming up next. We have so many college friends that are like,
I know.
but I didn't know that till 5 seconds ago.
Seattle's a small world.
Be talking enough. I didn't know.
Hey, look, we're quiet with our wins. All right, all right, y'all. Give a round of applause for one of the dopest people that I know, especially when it comes to startups getting from 0 to scale. And I think that how many of you guys would love to be in a position to do that and to have the wherewithal to be able to accomplish that?
I don't see enough hands. I think they're scared.
All right, so just like if you notice today, you're getting master classes today. So don't take this for granted. So I would like to bring up to the stage none other than the Mr. Marcus Knight.
How is everybody doing today? What these slides at? Yes, my name is Marcus Knight from Chicago, Illinois, the best city in the world. I live in Seattle, Wilson, second best city in the world. So I want to talk to y'all about go-to-market, about how to scale your ideas in business. But before I get started there, how many people have a business or have an idea that they want to scale? Just raise your hand. Oh, we got a lot of people. Okay, cool. How many people are looking to raise money? Raise your hand. Okay, cool. All right, real quick, I want people to stand up real quick for me. Can everyone stand up real quick? I want you to sit down once you've gotten to a certain number. So this is all about like go to market and networking. So I want to know how many people if you've If you have networked with 10 people or less, can you sit down? Okay. Network, and I'm talking about in this at this conference for these okay, this conference. If you've networked with 25 people or less, can you sit down? If oh my goodness, goodness. If you've networked with 50 people or less, can you sit down? If you've networked with 100 people or less, can you sit down? Wow. Can I get a round of applause? Wow. All right. So we're going to get into it. But the reason why I'm saying that is that this conference is nothing but nuggets and gems. Like I've been to a lot of conferences, got a lot of information, but nothing like this with the type of people that are in this room. And what the elders said yesterday about how we're able to build together and everything else, if you're not taking advantage and networking with folks, you're missing the opportunity. I mean, I know someone that has a marketing consultancy in the back. I know someone that has product and AI up front. Y'all need to be talking. Like y'all need to be making money together for real. You got someone here that does sales and revenue and go to market. Come talk. Let's build something. Okay, so let's get into it. So yes, I've done this a few times over. Let's see, what is it? Is it? There we go. So here's some of the companies that I've worked at. So 0 to 100 million, yes. I'd say that I've done 0 to 50 million way more times. But some of the companies on here, mostly tech type companies being like Groupon, Textio, Avium, large organizations that are doing really well right now. But I've also done nonprofits, Equal Opportunity Schools, a local Seattle-based company, Kingmakers of Oakland, some other ones. I've also done retail like kids' clothing lines. My son has a kids' clothing line, Kid Culture, down at the bottom right. And helped out like watch companies, all kinds of different things. So when you have a go-to-market strategy, it doesn't really matter what the industry is, you all need it and it will actually benefit you very well. So from my standpoint, it's like, how do you figure out how to take your idea and get it to the point that people want your idea? And so we're going to do that. We're even going to workshop some of this out today. So if we go to the next slide, go-to-market strategist. That's what I call myself. Fancy word for I come up with a revenue plan. I can help you execute on that plan to scale your business and then help with like reoccurring business as well. So how to get things, get customers to keep coming in so that you can scale. Simplest way to talk about go-to-market strategy. All right. What we really are going to focus on are the 5 key like blocks for me as far as like what it takes. And number one, where I see people really get it wrong out the gate is that they have a great idea, but they haven't understood how to like solve the right pain point. And the pain point is the area that you focus on. Some people solve or do solution, but I like to start with the pain that I'm looking for, and because the pain will then get into the impact and why people need your service or your offering, whatever that is. So when I think about where founders typically start is they want to build something for everybody. They have this great, interesting idea, and folks are going to want to just like come to them because they've built it. Have you really gone out and understood, talked to folks, crowdsourced to see why they actually like it or why they don't like it? What feedback are you getting? What can you do to change? What can you do to enhance and change your offering? And then it's all about how do you talk about it? Like, how do you take what you're looking to solve for and talk about it in a way that people understand it? So if you don't do this, what I typically see is that there's a lot of like people are like, oh, it's a good idea. Come back to me in a year or two from now. Like you're just getting a whole bunch of like, not real traction, real type of like insights for you to be able to like scale the business. But the other piece of it is that they feel like it's something that is a nice to have and not a necessity. So when you get it right, customers will come to you and say, I need your thing. I need whatever it is that you're selling. I need it right now. Just, yeah, I don't care how much, I'll pay for it. If they don't have the money, they'll try to negotiate with you. That's a sign that they really want what you have. They just maybe don't have the allocation of budget. Then you can work out a deal for them. So before we can get into messaging, you got to start with the customer, the ideal customer persona. When I think about the ideal customer persona, I think about what founders say. Like I mentioned, they want to sell to everybody. What you want to sell to is a specific type of person. So yes, the grand scheme of things can be, I'm going to do something for that everyone's going to be able to utilize, but that's not how you start. How you start is I get real specific. I'm looking for, I'm going to use a B2B company, for instance. I worked at a company called Textio, and Textio is a Seattle-based company that that uses machine learning AI to reveal the language patterns that that corporations use in their job descriptions and how they can be more inclusive with their job descriptions. They want to hire more Black men, Black women, et cetera. How are you speaking to them in order for that to happen? So work for this company. Actually, the reason why I moved up to Seattle was for this company. And when we were going to market, the first thing that we thought about was, all right, we want to sell to diversity and inclusion officers, and we want to sell to hiring managers. Those are the pain points that we're solving for. What I instantly realized is, yes, those are the people that care about the problem, but they may not have the money to pay for what we're actually trying to sell them. So when we go from a few grand for a few grand on a subscription, an annual subscription, I then was able to turn that into 6-figure annual subscriptions with every major company, pretty much. And how I was able to do that was by telling them, hey, let's get this persona interested because they are very fired up about what we're trying to do. And it's a real good thing here. So we talked to all the diversity officers, all the hiring managers that we could. But when it came to budget, I had to realize who had the bigger budget, who could pay for this. If it was going to be a 6-figure offering. That was going to be from a branding and marketing perspective, because if you're talking to large organizations, that's where they have one of the larger budgets in the organization, right? So I went from trying to really get these 6-figure deals when everyone's trying to nickel and dime me, to then once we get introduced to the branding and marketing officers, they're like, oh, that's it? 200 grand, that's it? 500 grand? Oh yeah, that's easy. We'll pay that. We'll write that check. But I had to talk to each one of those people differently in order to make that happen. Now, when I went with the ICP for them, or like once you nail that, they're all going to become champions for you. So you're going to have the diversity person talking in the company, the marketing person talking in the company, the users talking in the company. Everybody's talking about your product, and that is who. But they all have their own talk tracks in order for you to. You're solving a slightly different but similar pain point for each one of them. So I have a slide here that is something that I use with my consultancy today. That if we send out the slides, Mark, then we can give this to them, or I think I have it on my website as well. But this is the buyer journey that I'm looking for, is like, who are all the people I'm selling to? If you only have one person that you're talking to in the company, the probability of you closing that is very low. Especially if you're doing B2B and trying to do enterprise, I typically am looking for 5 to 10 people within an organization that I'm talking to, and talking to them slightly different each time. So when I'm speaking to my champions, those are the ones that are going to be using the product. They're the ones that need to have it. They want to do this thing. Yes. But what are they more importantly? Does anyone know what a champion is inside of an organization? What is a champion? Can you tell me? Cheerleaders. That's it? They're your cheerleaders. They push the product forward. They're the ones that are putting pressure on their management team that they need to have this thing, right? So they're talking to their managers. Their managers are like, I don't know if I have the budget, but this is something that I want to do. So then they're trying to go up market. They're trying to go to their VPs and director levels who are like, yeah, this is something that's interesting, but we don't really feel the pain yet. And the CEO or the C-suite may care, may not. So when I'm speaking to each one of these people using the Textio example, it's all different. The end users were going to be the recruiters because they're feeling the pain point, right? Like they're doing this every day. So they're doing this. So we have a messaging for them that is very different than the managers who are like, why aren't y'all closing more recs? We have all these open applications. That was back in the day. Now we're in a recession from what Mark said. So that's different. But so they're trying to figure that out versus going up to the people that actually have the budget to say, yes, this is who we do think that this is such a problem that we will pay for it. And I mentioned using the chief branding officer because they were like, I get it. This is a DEI platform, but why should I pay for it? And when we tell them that this is how they are showing up in the world to people, that changes the conversation. So we talk about creating messaging with these folks, right? So I'm wanting to make sure that I am having something that is very on point, that is going to stick with them, something that is going to make sure that they feel equipped enough to be able to speak internally about this problem. So they're going to go be able to talk to their manager. They're going to be able to talk to their coworkers. They're going to be able to talk to everyone about this. The things that I typically see are founders have an idea. They don't know exactly how to pinpoint on who their target audience is and how to talk to them directly. And there's a lot of missing information. So for me, I want, if I'm starting a company from scratch, and we're going to do a little bit of workshop in a little bit, so I'm just trying to get through some of these slides so that we can actually put this into practice. I'm educating people on the issue that I'm solving for. That's going to be on social platforms, LinkedIn, Instagram, wherever you're active, wherever your personas are active, that's where you should be at, number one. Number two is I'm trying to create a space that we are the thought leaders and we're able to take they're able to relay this information forward. And then I'm also creating content that I'm seeing to them in drip campaigns on marketing. So does anyone know what a drip campaign is? Few people. Basically, I am going to take a email sequence. So call it 5 emails within a 5 emails that I have curated for the target audience. I am going to put it into a system, my customer relations management system. We'll talk about that in a little bit of CRM. And I'm basically going to turn an on switch. So it's going to automatically message these folks every several days about relevant content, not, hey, do you want to buy my product? Hey, do you want to buy my product? It's going to be more along the lines of, we are solving, or there's this pain that's out there that we're hearing from other people. This is how we've heard of certain organizations solving that pain. If this is something that you're interested in, let's talk more. I'm not even selling the product yet. I'm just talking to them about what they're dealing with on a day-to-day basis. The next message is something follow-up along those lines. Hey, not only was it this problem that we've heard about, but we had problem Y as well, and that problem is slightly different, but the impact of that is costing money or whatever it is that they care about. Typically, I try to relate everything back to return on investment. And depending on who you're selling to within an organization, that can be very different. Dollars and cents is probably the most common thing. But again, if you're talking to HR, maybe it's not dollars and cents. Maybe it is the number of people that they're able to hire, how many people are having a good candidate experience. If you're talking to marketing, maybe it's, how many people are coming through the sales funnel. It just changes depending on who the audience is. If it's engineering, it's about efficiency probably. So when you're able to create those things, when you're able to put that email sequence together, and I have an email sequence for each persona, because again, they're different problems. An email sequence for the user, an email sequence for the manager, an email sequence for the VP director level, and then a different sequence for the CEO. And what I mean by the different sequence is that depending on how big the organization is that you're trying to talk to, they may not, they're not going to be looking at their emails like that. They're getting emails all the time. So why are we going to open up your email? You got to have a very convincing subject line in your email. Number one, grab their attention. You got to understand when they're in front of their computer versus when they're not. Most CEOs at these large organizations or C-suite are 5 a.m. club. Has anyone heard of that? That's when my team would do most of their messaging. 5 a.m. And their success rate was pretty high based off of that. And what it was the CEO may not call them back or whatever, but the CEO would forward their message along to someone else and say, hey, I got this interesting email. Can you call Marcus? Can you set up a meeting and let me know, do the research and let me know what happens then? Oftentimes we saw our success rate when that happened just rise and rise and rise. The other piece of that is when you have a good email campaign, there's all these great tools outside of AI, but we will be using AI as well. But just to track the data analytics around all of it, which is the next piece that we'll be talking about, is you take the CRM, which is your customer relationship management software. If you have an idea, I would get a free CRM right now, and there are a few of them out there. More than happy to talk to you about what they are. But there are free softwares out there that don't cost any money for founders right now. What does a CRM do? It's a way to keep track of all of your notes when it comes to your prospects and the people that you're trying to target to buy. That's where I see a lot of founders get wrong. They got napkins. They got it in their head. They got it on their phone and Slack or Teams. They got all these different areas. I was talking with one of my clients actually yesterday. It was yesterday. I said, man, you just went to this amazing conference out somewhere on the East Coast. What are you doing for all of your leads? It's like, oh, it's all in my head right now. I'm like, I'm at a conference right now and I'm putting stuff in the CRM right now for you. So what are you going to do? By the end of the night, this morning when I woke up, she had all of them in there. And what was in there was who she met with, the notes of like the conversation. What was that person interested in? What was their objection to whatever they were talking about? Putting together a timeline, just could be a guesstimate, but a timeline of when you think that something's going to close. So this is a branding and marketing company. And she said that I think it's going to close in January on one of the notes. I slacked her this morning and said, why did you put January when you said it was a great conversation and she wants you to follow up on Monday? How did you get to January? And she's like, well, I'm just giving her grace. I don't want to bother her too much. So you got a $500,000 deal that you just talked to somebody and they showed so much interest, but you said, I don't want to bother them. I'm like, wait, something's not clicking with me. So I had to call this morning and say, no. This is what you're going to do. You're going to send a follow-up email right now. You're going to say, the goal of our next conversation is to see if we can have a partnership and we can close our partnership out so that we can get started on working together. And let's see if we can get that done before October 5th. Before October 5th. She didn't even think about it. She sent it out. TBD, I'll let y'all know how that goes. But that's the type of information that's the type of urgency that you have to create. Create a sense of urgency so that these individuals, if you're top of mind, stay top of mind. As soon as you give them a break to just chill, then you lost the deal. Your competition can come right in and steal it from you. And you thought it was a great conversation. It was a great conversation, but you didn't execute. So the other piece of it is that when you have the CRM, you're able to track so much data analytics around how long it takes for a deal to close. What is it that is resonating with the target audience? and how are the deals coming through? Are they coming through from a conference? Are they coming through from the email campaign? Are they coming through from a newsletter that I send? Are they coming through from social media? And that's going to give you insights into where you need to put more money or more effort into to get more revenue. So if we're going to go ahead and say newsletter, well, newsletter is a good one. I see a lot of people send out newsletters. I see no call to actions on those newsletters. And you just left, depending on how many people you send that to, and depending on your business, you just left so much revenue on the table just by doing that. So what I always recommend is a newsletter. And I'm not marketing, I'm just sales, and I have marketing that reports up to me. But if we're going after enterprise organizations, actually, if you're going after small organizations, if you're going after B2C, I'm still putting in 2 to 3 call to actions in that email that are going to lead to them booking a meeting with me so that we can have a conversation to close this. Or if it's B2C where they can just pay right away, you can just pay here. Different wording, but that's the button that I want in the newsletter. If you take all this information and then you're able to see how long it takes to close, where they're coming in at, where can you double down, how do you tighten up your process so that you can go from 100 days to close a deal to 30 days just by speaking directly to your personas, by having good thought leadership content that doesn't have to do with anything about what you're trying to sell them, or it has to do with it, but very loosely. And what I mean by that, like I'll use the example of Textio again. If you all ever get a chance, just go on, type out Textio on LinkedIn and just see how the founders talk about it. They're talking about data analytics. They're talking about AI right now and the biases in it. They're talking about how you're losing out on talent to your competition. They're not talking directly about Textio, but there's underlying tones about the company. And Textio is TEXTIO.com. That's a company. So if you go ahead and if you do that, then you'll see you become a thought leader so that whenever you're out online, out in the LinkedIn, Instagram, etc., you'll have people that will actually say, I saw what Mark was saying online. I should probably have my team book time with him. Or did you see this interesting article, this controversial article that Mark put up? What do y'all think about it? Like, you're getting people to talk about you in a way that is like, whether it's you as the CEO or you as the company, both can be true, but like you could have the companies putting out the information. I like to have the person putting out the information because now you're becoming that thought leader in that space. Once you get that information, it becomes very easy to then just repeat that cycle. You're doing A/B testing on your messaging. A/B testing meaning that I have one message going out that says one thing, A. I have another messaging that goes out that says something slightly different, B. And now I'm just comparing how do they actually how do they actually perform? And whichever one performs better, I'm going to do that one first. I'm not going to abandon the other one. I just may use it at a different time. So I talked a lot about the sales part of it, and some of that was marketing with the socials and LinkedIn, et cetera. But what you're looking to do is you can operate as a one-person company. You can operate as a huge conglomerate right now, completely right now. Like, again, AI has changed the game. We all need side hustles. We all need all these things. Like, I use my marketing in order to get all the leads and things while I'm sleeping. So I set up all these automations that go out, hundreds of folks in different areas. And when I wake up, I get 10 people that are interested in what I said. I remember, what did I say to that? Oh, this is what I said. Okay, good bet. Yeah, we're gonna have this conversation. And then I'm also tracking how they are, what is a high priority lead. A lot of times we go after any and everything, and we haven't qualified who we really want to go after in order to make it something so real that, like, even if I'm talking to these other 10 people that are just kicking tires and not ready to buy, this one person could make my whole year. This one company could make my whole year. So I say, hey, you know what? Maybe we'll come back or we'll do something later, blah, blah, blah. I got to focus my attention right here. This is the one. You need to come up with that list of what's your priority targets. I typically call it a priority 1, a priority 2, and a priority 3 target list. So if you look at like a bullseye, the center is priority 1, the second ring is priority 2, third ring is priority 3. Those are the people. The priority ones are, I have to hone in on my messaging so sincere that, like, they got it. Like, they are definitely going to want to do this. Marketing analytics is a big part of that. So which we talked about, but you get the marketing analytics piece. How do they come through? What were they interested in? How do I double down on this information? And then now I'm able to take that and then put more sales content, put more marketing content, have my leaders in the organization talk more about these things, go to conferences and speak directly to what it is that they want to hear. We're just about done, so then we can get into the workshop session. Then we bring in AI, right? This is where I've been in the generative AI space for 10 plus years now. It's pretty interesting to me. I think that I just like to focus on what I need it for specifically as a small business. And what do I need it for specifically is operational stuff. I don't need it to do all the things. I need it to make me operate like I am a 50-person company. And so that's what those are the things that I'm looking for. So when I think about AI for operational purpose, if you're a small 1-person, couple-person organization, where are the pieces that you have bottlenecks at that you can actually incorporate to make you more efficient? I typically talk about all the different areas. We talked about, like, where the CEO might have information on a napkin on the back of their head or somewhere else. There's a lot of these places is where they have information. Now, if you take that and incorporate AI in those different areas, it can actually feed you the insights that you need to target the right folks. Fragmented processes is the way is like the way that we've done business for such a long time, and it's the way that you lose so much on revenue and the way that you lose to your competition. Speed and efficiency are going to help you beat out some of these even large conglomerate organizations that have all the resources in the world. Because large organizations, if I'm a small organization, my advantage is that I'm agile. I can move very quickly. I can get things up and running right away, from slide decks to websites to whatever else. Yeah, there's extra work that needs to happen, but I can at least get it done, get it started right away. And now I just have to call somebody else to help me with the back end or whatever it is. That's my advantage as a small organization. And that's what we have to utilize now in order to make things really happen. So let's get to let's go ahead and get to a workshop here. So this is the go-to-market strategy to start for small organizations right now. So these are all the things that you need to be thinking about. We will workshop this out. So I'll give it a minute. And if y'all don't want to take the pictures, we can just send them out, but that's up to y'all. We'll set it out. So all of these areas need to be talking to one another or integrated with one another in order for you all to be successful. So ICP, ideal customer persona, my messaging, my RevOps, my CRM, Slack, whatever you're using, marketing, AI for scale, that is a sound go-to-market engine to start. It will continuously evolve. What it is today, if you had all these things in place, what it is today, probably won't be the same in 3 months. But it's a good starting point. And all you got to do is make tweaks here and there. You don't need to do much more. You don't have to rebuild it from scratch. You just have to tighten it up a little bit. Does anyone have any questions on what any of these mean? I just want to make sure that we got the right messaging. Everyone's on the same page so far. RevOps, revenue operations. So that is mostly of all of the things in the background that will help you be successful. And what I mean by that is the customer relation platform, the data analytics that go along with it. How are you setting up your data or your back end to get the right type of information? So if I talk with CRM, I'll use a CRM as an example. So HubSpot is the one that I typically have small organizations use right away because it's free. They start nickel and diming you when you want to do all the great things. Yes. Ideal customer persona. Yep. So we'll just stick with HubSpot as the example. If I have leads that I'm feeding, so newsletters, all of these emails, all of these things, I'm tracking where that lead came from. That's part of this is part of the RevOps thing, where the lead came from. And then from there, when it becomes like when we have a conversation, I'm tracking the deal stages, a discovery call, a demonstration of the products or a meeting that's going to advance a little further, a proposal, a negotiation stage, a closed won stage, a closed loss stage, meaning that I'm just tracking how the pipeline, how these organizations are going through the pipeline, and how can I tighten that up? That's what I consider RevOps. There's deeper than that, but for right now, that's a starting point, a good starting point. So let's look at, has anyone heard of Calendly before? Who has not heard of Calendly? It's okay. Okay. All right. So we're going to do a workshop about Calendly, and I'll tell you a little bit about Calendly. One, you all should know who Calendly is because it is a Black-owned organization worth $3 billion located in Atlanta, Georgia. It is a scheduling app. So basically it's a link. I think I might even have one on my website or something like that. You want to have a meeting with me? I'll send you my Calendly link. 15 minutes, 30 minutes, an hour, whatever it's about, I'll send it to you. And it's free to even sign up for. So that's what this is what Calendly is. So this is their founder. So Tope did an amazing job with this. So to give you an idea of how they acquire customers, this is fascinating. When this first happened, I was like, yo, hold up, how do I have a Calendly account? But someone sent me a link and said, hey, yeah, you want to book time with me? You want to have coffee? Great. Here's my Calendly link. I signed up, put my name, my email address in there, et cetera. And then all of a sudden, we have an account. I have an account. I'm like, wait, what just happened? I just got Shyamalan. Like, so that happens. And you just think about that. Like if I'm having meetings with 10 people, 10 people then sign up. They then have an account. They then have an account. They then sign up with 10 more people. It just keeps going and going and going. So it was a B2C problem first. B2C problem first. Then they ended up going to B2B because now you have all of this information or all of these people within a company, call it Apple, all these people within Apple that have accounts of Calendly. How many people work at Apple? I don't know. Lots of them, right? So then they just go to the leadership team and say, hey, y'all should create an account. We can have it all together, see if you guys can track all this information, but why don't we sell you an account so that all of your employees has this information? Or has access to this because they're signing up anyway. So you might as well have an account that you can control. So we're going to do this exercise here. What I want is, who do you think their ideal customer persona was when they first started? And anyone can shout it out. You can raise your hand. What was it? Working professionals. Okay. What is their messaging? Yep. Say. Okay, so if you had to say it succinctly, because I'm I'm the working professional, schedule a meeting. Schedule a meeting, right? Very simple. And then we just talked about what their acquisition strategy was. So let's see here. They're solving one clear problem. As business professionals, it was for small teams to start. It was one clear problem, scheduling made easy. Simple. Scheduling made easy. You know what that is? That's tweet worthy. That's viral. I don't got to explain that to anybody. Everyone gets it because we all have that problem, right? So knowing what we just said right now, I just have a question of how do you think that they could have tightened up their process if they were early on? And there's no really wrong answer. I'm just curious to know. Feel free to raise your hands, blurt it out. But like, how do you think that they could have tightened up their process? When it came to customer acquisition? Go ahead, Sierra. Mm-hmm. 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 So let me make sure that I understand. I can say it back for the people that are on the stream. I would take a look at who was setting up on the Microsoft server versus G server, and what was the last thing you said? Just see where they were going because they don't talk to one another, right? Anything? Yeah. So you're turning them from registered to paid customers because they're not able to talk. That's brilliant. You want to come work with me? Okay, all right. And then I want to see if someone else any other ways that you could have tightened this up. Yes, sorry. Mm-hmm. She would have started a drip campaign for everyone that hasn't used it, who got an account because they didn't sign up, and then turn that into how do you utilize it? How do you pay for it, or how do you use it? How they can start utilizing it for themselves. So start an email drip campaign for the people that just signed up because they filled out the link for a meeting for somebody else, and then see how they could have utilized it for themselves. That is great. That is brilliant. Evan. Check the email subdomains for larger accounts to see if there are sub accounts that you can then go up to and sell from that standpoint. Is that correct? Yep. Okay. So one more in the back and then we'll move on. Yep. Mm-hmm. Yes. Target. Yes. So basically, people that have a high demand of meetings, target those folks and go at conferences, et cetera, and talk to them so that you can get mass signups at conferences and things of that nature. Yes, great. The last one go ahead. Put it in a CRM. Yes, absolutely. Absolutely. My man. Because now you have all that information in a CRM. This is brilliant, and that's exactly what Calendly did. So I don't know how much time do we have left here. Okay, bet. So who has a problem? Let's do this live. Like, who has a problem that they are working on, an idea, and let's come up with this together as a group. Is that okay? Is that all right with y'all? Is that all right with y'all? I mean, y'all, yeah. Oh, okay. I'm like, dang, it's quiet as a church in here. I ain't gonna tell you what kind of church, but yeah. You're right.
You have a question, meet me over here.
If you want to workshop this live, like I'm trying to see that like we help each other out while we're here. Yes.
Hi, everybody. My name's Yvonne. I have an idea That is essentially like a food directory slash fitness and lifestyle app for traveling professionals, musicians, people that may struggle with keeping their habits as far as like they always have to eat out and maybe they're like they have late shows and it's just hard to find things to eat and stay on track with their goals. So that's a app idea I have.
Okay. And we'll try to do this in 2 minutes. Is that good? Okay. So we'll try to do this in like 2 minutes and hurry this up. So we have an app that is for busy professionals for food and what else?
Like
And health.
Yeah, health and fitness.
Health and food. All right. So do you have you said busy professionals. Is there somebody else that
Traveling specifically.
who?
Traveling professionals.
Traveling professionals.
Thank
Thank you.
They
Thank
can't
you.
stay in their
Okay, so what's the messaging? Does anyone have any idea of like some messaging, a one-line message that we could offer for this? Healthy food on the go. Okay, that's a good one. Anyone else?
Stay on track while traveling.
Stay on track while traveling. What would you say? Food and fly. All three. Go ahead. Did you eat? Sell me this pen. Okay, so we have 4 right there that you should mess around with. Okay, that's the messaging. And it can actually tie into the pain. Now the other piece is how are you going to target these folks? And you go ahead. Yep.
So this is how I should target them.
Mhm.
Off the top of my head. Maybe going to concerts or like places where you know people are gonna be that travel out. We're going to conferences where people that travel a lot are for their work are, and then be like, "Did you eat?" You can, use this app and this can help you. Maybe you can. Well, I'm not. Well,
I love the effort. But what we would do is we got to figure out how to scale this, right? You can't be everywhere at all the time, and we need to be able to track how they're coming in and everything else. So I would do something along the lines of go ahead. Partnering with airlines, travel booking sites, social media. So now these 3 options that were just said, you can reach thousands of folks just by doing LinkedIn content, blog posts, newsletters, LinkedIn premiums where you target Sales Navigator, so you can target these individuals. And then you can also accompany by going to some of those conferences. But if you're just going to all these conferences, you're just wasting money, spending time. When you can do this, I can do this in my room. The newsletter can be called "Did You Eat?" Rome, you got gems, bro. I don't know, man. Bars. All right. Let's get another one. You.
Okay, this is not tech.
Yeah, that's right.
Okay, so my concept is, and I think it's kind of a nonprofit, is dealing with seniors.
Mhm.
So I've been taking seniors through COVID 2020 on field trips.
Ooh.
So now it's turning into a thing.
Mhm.
And I have a full-time job, and I really want to focus on maybe the loneliness piece,
Yeah.
getting out, interacting with community. So I'm kind of thinking I want to do this in retirement, but I enjoy doing it now. Like some people have not had the opportunity to go to like the Monterey Bay Aquarium. I'm from California,
Mhm.
did that. So now what's been like 10 people, so like 5 people. Now I'm having like, I think our last count was like 55.
Okay.
So I need more people, and it's really a passion, but it should be a business. And I'm just kind of giving too much of my time away doing it.
Yeah.
But I need to get compensated for it now.
So
She got a whole Miss Frizzle of Magic School Bus going on.
yeah. That part. So real quick, where was the sister that won last year that you built that for? A Thin Line, or what was it called?
The line.
The Line. Thank you. I feel like y'all should partner. Y'all should talk about something. See? Like there's an app already built, right? There's you have to figure out the messaging that goes along with it, but there's a partnership right there, right? And then now you can figure out the type of assistance that you need from working like operationally. I would keep it small to start though. I would like if you can get an intern, if you can get someone that is good operational, do that first. And every intern needs hours. Yeah, yeah. College kids need hours, right? And then a small stipend to go along with it. And as you grow, as you start to get things moving, then you can start to maybe bring them on full time, et cetera. Let's see. Did we talk about? Oh, we talked about messaging. I think that's good. Let's get one more.
Nice idea.
Hi, my name is Latrice Henry. I'm a flight attendant for American Airlines.
Wait. Can you say that? Can you say that one more time?
My name is Latrice Henry.
Wait, did you? Thank you.
And I work for American Airlines. I'm a flight attendant.
And airlines, travel. Oh, okay. All right. Go ahead, start.
Okay, so my problem is that everyone who travels and gets on the aircraft, it is a problem for when they board. So my idea is to have an AI generated boarding system that makes American Airlines save money and a great experience for the traveler, because that's the most harshest time during boarding, because people are slow getting in. When they cross the line to get on the aircraft, they're like, where do I go? Where's my seat? So how to solve the problem is you board from window to aisle to where people are getting in faster. Because people, when they're in the middle, they have to get up, take the seatbelt off, and then for the person to get in the window seat, and then the other person it's just a problem. So the AI would solve the problem from boarding from window to aisle back to front. And yes, and we would have sensors in the overhead bins to where overhead bin space is filling up, instead of talking to the agent that's having problems with the other person in customer service where we can't get to talk to them. So that's my idea. So it would go into
Okay. Do you have a name for this product?
It's FlySync.
FlySync.
Or quantum boarding.
Okay.
I can just see it right now. The FTC LPs are like, Mark.
Yeah, that's what I'm doing. I'm going, Mark.
But I won second place last year.
Are y'all really trying to put me on the spot? Screw it. We good?
Yep.
Talk to you soon.
Yes. All right. There we go. Thank you. Okay, so this is a great idea. To start, it's a problem that everyone faces. You all had to travel here, right? Y'all had to like we face that all the time, right? So I think that one, what is the line, the messaging that we could say for this? What's the messaging to get people interested, to get all the airlines interested? Anyone? Make traveling easier. Efficiency. Easy boarding.
Can we take off already?
Say that again.
Can we take off already?
Take off already. We all experienced that. So these are some that you have right now. We can keep workshopping, but that's some. Okay, so then who's the customer? Is the airlines.
It would go definitely for the airlines, but it would make boarding easy. So the audience is everyone who boards the plane. The
question: as a flight attendant for American Airlines, you talk to the other flight attendants, correct?
Yes, but this idea just came.
But what I'm asking is, if you build out this idea, you can share it amongst all flight attendants, and then they can share the app with their flights that they have to load up, correct?
100%.
I didn't do anything. Y'all did it. Like,
We'll be talking.
Yeah, talk. We'll definitely talk.
Can we bring up one startup that actually has a go-to-market that's in process of go-to-market?
Do you have one in mind? Go ahead.
I think I do.
Okay.
Is Paul here? Paul, can you come up here really quickly?
Oh, Flow. Yes.
I know, right?
Wait, did you know I need you to bring the belt?
Hurry up, man. Now you play college football, so I know the knees.
On the hop. On the hop.
Yeah. So I wanted to bring this up because maybe showing what it means, like if a person's already started in that process
Mhm.
and giving what that progress report looks like when they've done it correctly.
Mhm.
All right. So come on up. I want you to go up on stage
Come up on stage.
and you got 2 minutes. Do me proud, sir.
Am I taking questions or am I just coming up here to talk?
Start talking first. Let's start there.
All right. Hello, everybody. Paul Roberson from Las Vegas. I'm just a guy who had an idea. It didn't exist. So I scratched my own itch. 5 patents later, here we are. What started off as a hands-free dog leash, because that's what I wanted, because I was tired of the whole hand-to-hand leash exchange, taking my dogs for a run, made my runs from a 30-minute run to like an hour. So I was like, no, I got to figure out this solution. So after creating it, put the belt on the first time, I had an oh shit moment where the oh shit moment was, this is not just a hands-free dog leash. I just accidentally revolutionized the speed and agility harness for athletes in the way we train. And so what does that mean? What does that look like? You know, it's a 360 like rotational belt you put on around the waist. Allows your dog to just run circles around you. No more hand to hand. So I was gonna call it flow because that's what I wanted, was my run flow better. So I was gonna call it Flow Doggy, a new leash on life. Right? And so with that being said, luckily for me, I had a boss who was at Lyft. I opened the Nevada market for Lyft, the rideshare company. And I showed him the belt and he was like, oh shit, we got technology on our hands with 5 patents. And so here we are. It's a simple guy. Matter of fact, you know what? I'll take you. I'll take you.
I didn't sign no waivers though.
Just don't try to run. Or actually, yeah, go ahead. Try to run.
You want to see me bust my ass? I don't.
So this guy right here now, and he's a little on the thicker side. So
He's had linebackers in this.
I'm eating good at home.
but now just go ahead and do a swift turn. Full turn.
Sorry.
Let's turn. Full turn.
Really?
Oh.
So now, you know, and this is just, I'm lucky enough to where my hardware sells alone without the tech enablement. But right now, athletes use this for to train how they play with resistance.
This is a stunt campaign. Who has recently used this belt?
Yeah, so I found myself watching my first tennis match ever in life at the US Open. A young lady named Jessica Bagula and Layla Fernandez used it. We're now scaling into, we have partnerships across sports in NFL, NBA, MLS, WNBA. And so right now it's really about planting those seeds, watering those seeds and building bridges versus transactions, because we're going to be around for a minute. And once we do tech enable the harness, you guys are essentially looking at the world's first smart belt.
Let's go. Oh.
So Marcus, how would you rate that go-to-market strategy?
I mean, fire, number one. That's fire. Let's see. If I'm rating it from on a scale of 1 to 10, man, you got to be a 9.5, 10. Like it's there. It's there. We're definitely going to talk because I'm trying to figure out how to scale it faster for you, because you've made some really good traction already, but that's a 10. That's a 10.
So Marcus, where can they find you? Like, because You're doing some pretty epic stuff right now.
Yeah, I'm mostly inside, but but last night I was outside. So went to Little Brother concert. So I'm a little, it was dope. But so there's a couple things. There's gonna be 2 QR codes. This one is for my go-to-market AI cohort. It's a 6 to 8 week cohort. And we're going to be workshopping ideas along. It's for nonprofits, it's for pre-revenue, it's for post-revenue up to a certain amount. And then there is basically it's built in where what we talked about today, in-depth workshopping so that you have your own go-to-market playbook when it's done, right? And then how do you incorporate AI operational efficiencies in there as well? So that's one area. Oh, sorry, did everyone get it? Cool. All right. And then I'll go to the other one. Here's my QR code for all the different ways you can connect with me. So, I have my culture perspective, fractional CRO consultancy is one way, LinkedIn, socials as well. Yeah, overall, and I'm here. So again, I'm challenging y'all to meet with 50 people because y'all can have business ideas. We had two sisters today that have an idea right here on stage. Talk with one another, figure out how to make things work. That's all I got.
You already said. He said, get them on Vetable. Yeah, I really want to know what those Vetable scores would look like.
Yeah, that's it. Yeah, everyone should. Once you have a pitch deck, etc., you should get on Vetable. I messed around with it. It's fire. And Vetable, y'all heard about it yesterday, so I'm gonna go into it. But if you have an idea, if you have a startup and you have a pitch deck, get on Vetable.
Oh, boss man, you are officially off the hot seat. Yo, give this man a round of applause. That was incredible. Like, understand this. Like, this is the type of stuff that founders and startups and many other companies, hell, even Fortune 500s, when they're getting ready to release a new product, this is the type of stuff that they go through. When they hire consultants, like, for example, Marcus, this is what they pay for. So I hope you guys understand the value of what you're getting today at this conference. Okay. So don't take this stuff for granted. Literally the goal of what was the theme for this year's summit? So if you're building to stay ahead, make sure you're making those touches with the folks in the room. Make sure that you're building those partnerships. Make sure that you're getting on calendar meetings as follow-ups. These are the things that you need to be doing. Okay. All right.
All right. So let me just give you the update on the schedule. So right now, if you are general admission, you will have a break. So feel free to grab lunch. A better idea would be to network right now with 50 people. If you want to be efficient with your time. And then if you are a VIP registrant, then you can go upstairs to the 4th floor. And I will let you know that your cell phone has to be checked at the door. So there will be someone there to check your cell phone at the door, and then you can just pick where you want to sit. There's also some refreshments up there, so feel free to help yourself. And then get ready for an amazing AI confidential session.
This is going to be exciting. And for the folks that are watching virtually, we're just going to pause and play some music for you. So we'll be back. Just a heads up for the virtual audience that are watching. We're actually going to end the stream, but we will be back at 2:00 Pacific time, and we will restart the same webinar. So this same link will be active.